The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the April 1st wonderful Wednesday edition of Hour 2 of the Trader's Edge. Hope you're all off to a great start of your April Fool's Day out there. I don't have any April Fool's jokes for you other than, hey, the market is red out here. I think that's the April Fool's joke out there, but we'll see. Now, let's make sure that you and I, we do everything we can to have an extraordinary day. Of course, we always should remember that what's talked about is a dream. What's envisioned is exciting. Of course, what's planned becomes possible, but what's scheduled is real. And I want to thank you for scheduling your time here with me this morning. I'm absolutely here to serve you. Feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can also reach out to us at 727-445-1044. Remember, if you've got a question, well, I can guarantee you one thing. More than one other person has got that exact same question. So go ahead, call in for them. Go ahead, do that. Pick up that phone. Make it a random act of kindness, because that is truly the way to start your day. That's what we like to do here at TFNN. I'm Steve Rhodes. Welcome to the show. The Dow is off 161 as we speak right now. That's the April Fool's joke. That's the best one that I can come up with as we speak. It's trading at 17,611. You've got the S&P off 16 at 2,051. Composite down 49 points at 48.52. Russell 2000 off 11 points at 12.41. The DAX is up 23. The FTSE's up 35. Gold's up $15. Silver's up 15 cents. Light sweet crude is up 33 cents. Leading the charge to the upside, you got DYAX Corp. DYAX is the ticker symbol. Wow, that's up 50%. Must be some kind of merger buyout or something. Sears Holdings, I guess peeling off its real estate, creating some type of readout there. That's up 7.5%. Panera Bread, that bread is rising. PNRA, that's up 1 8/10%, up 286. Pioneer Natural Resources up $3. Monsanto up a couple. Rand Gold up $1.90. We'll take a look at some of these mining equities out here, with gold being up $15. To the downside, Intercept Pharmaceuticals off 15. Regeneron Pharmaceuticals down 13. Priceline off 13. Biogen off $9 out here. Advanced Auto Parts, AAP, off $5.56. We'll try to take a look at all of these that we possibly can, but let's begin the day by taking a look at the what's going on inside these general markets out here. Let's take a look at, so we started, I guess I'm going to do this here because in case you didn't catch the first hour, I'm just going to do this and give you the key levels to be watching today. And what I've done here is we're really looking at, I'm looking specifically at the futures markets. And the reason is because they've been the ones that have given us really the best signal with regard to price to be paying attention to. And inside of the NQ, that's the low of last Thursday. 4270 is the number. Oops, I don't know why that popped up on my screen here. And that is a level. That's your hammer candle. That is a key level out here to be watching. So far, that area has been rejected. Now, let's go see. I'm going to try to switch back and forth here because I got to give you something to think about. So if these markets were really going to crack. It's only at 11 after 10 this morning. Let's go take a look and see what's going on inside of the QQQ series. Now, this is interesting. The top portion of my screen is called the QQEW. EW standing for equal weight. It's a First Trust NASDAQ 100 equal weight ETF. It's a tradable vehicle out here. How you and I like to use this is we want to understand what's going on underneath the covers out here. Are the Q, because when there's a divergence, meaning that the QQQEW is headed in the opposite direction of the weighted brethren out there, it sends us a signal. So here's the interesting thing as we speak at 9:12. Right now, the QQEW is doing nothing more than making a double bottom of that March 26th level. See that going across my screen? That doesn't mean that it can't get broken out here. We've got a long time left in the trading session. But what I can tell you, for everyone who's got their skirt and a tizzy out here, well, I don't know, skirt and a tizzy. Where did skirt and a tizzy come from? Or did I just make that up? But what I can tell you, until the QQEW breaks below, closes below, and these lines here that we're taking a look at my on my screen here. They're closes. So it's based on the closing price that creates these lines that we're looking at. But right now, the equal weight ETF for the Qs, and see where the Qs are moving in. The Qs are actually below that March 26th level. Not the case inside of the equal weight. That says, something to think about. Well, what's going on inside the S&P 500 out here? Well, let's go take a look at it. Let's go see its message. Oh, by gosh. Take a look at that. It's not even down to the March 26th low out here inside of the S&P 500. S&P 500 right now, it's stronger than the Qs out here. However, the S&P, you can see it's below. That's the bottom portion of my chart here. It is below that level. A lot of time left in the trading session. All I can do is give you what's the message of the markets as of 10:13 a.m. on April Fool's Day out here. Well, at this stage of the game, you're not getting any type of confirmation from the equal weighted partner inside of the index ETFs. We don't look at this too often because it's really only at the times where you see these divergences that you want to pay attention to. How often does it work? Basically, all the time out here. You can take a look. Here's the, as example, the RSP. That, by the way, is the Guggenheim S&P 500 ETF. If you take a look at the lower highs it was making back here in September of 2014, while the S&P itself, the bottom portion, was making higher highs, the equal weight was going ahead and giving you a signal that, hey, there's something that is wrong here. And it was just beating its chest saying, I'm the leader. The equal weight is the leader out here. Hey, take a look at what happened when the bottom was being formed back in October 2014. Remember, that was the scary bottom. That was the Ebola bottom that was out there. What was the equal weight doing? It was making higher lows as the S&P was making lower lows. Who won that battle out there? Yeah, it was the equal weight. Hey, how about back here? How about when we take a look at what happened back in March of 2015? The equal weight was making lower highs. The regular SPYs was making what? Higher highs. So is this something to pay attention to? Yes. Can we go ahead and hang our hat on it? You can hang your hat on it when you see the actual close of the day out here. I'm just giving you what it's doing as of right now at 10:15 a.m. At 10:15 a.m., the equal weight is saying not so fast. Now, look, the IWM, the Russell 2000, also happens to have an equal weighted partner out here, and that's called the EWRS. That's also a Guggenheim ETF out there, the Guggenheim Russell 2000 equal weight. The Russell 2000 equal weight is really just back. Forget about the March 26th level out here. It's just simply dealing with the breakout above its high from December 29th. It's trading, in essence, really right on that number, which was 45.87. You're trading at 45.81. We'll give it a 6 penny. Now, not a lot of volume inside this, but we really utilize these equal weighted ETFs to really try to understand what's going on underneath the covers out here. So the equal weights are sending us a different message at 10:16 a.m. Now, let's go take a look at the actual index ETFs and go see what its messages are. Right now, the Dow's off 154. The S&P is down 15. The NASDAQ NDX 100, well, I don't have that on my screen. I can switch over here. The NDX 100 is down about 40 points, about 1%, 0.9%. So a leader to the downside. Now, let's go take a look and see what the ETF message is out here. It's got 10 million shares to the downside in the first 45 minutes of trading. What took place yesterday? Well, yesterday the Qs closed inside of the swing point from March 26, which had 47 million shares. And what kind of volume did it have yesterday? 30 million shares. Closed inside it with light volume. Nonetheless, when you close inside a swing point, whether it's with light volume or not, it says that you can go test the lows out here. We'll see if the Qs can get enough energy to go ahead and test those lows. It has not, as we speak, just yet. Those lows being 104.92. The volume is 10 million shares. I can't tell you whether, volume, if we take a look, just as an example here, and you take a look at a 30-minute chart here for the QQQ series ETF, it looked like the Qs were coming in, even to with regard to, well, let me pull this back a little bit further out here. The Qs, the breakout inside the Qs on March 26 took place at the open. And at the open, there was 10.6 million shares to the upside on a 30-minute chart. Well, what did we just see inside of the Qs? 7 million shares. So the Qs, if we go ahead and we correlate what's going on, the Qs have come back to the breakout area of March 26 with what? lighter volume. So we take a look at that lighter volume. We go compare it to the QQEW, the equal weighted ETF, and what its message is. To me, it looks like nothing more than a continuation of just simply forming a bottom out here. I do not know what the volume's going to be like at the end of the day out here. And quite frankly, until the Qs go ahead and reject that swing point again being March 26, and the rejection says it's got to close above 105.70. As long as the Qs close inside there, says it can go test that low. What we know about yesterday, light volume. What do we know about the first 30 minutes of trading? Light volume when we take a look at that March 26 swing point. We'll see what happens during the day. Now let's go take a look at the IWM, the Russell 2000. We already know that the equal weight there is not exactly blown apart at all. What did the IWM do yesterday? The IWM pulled back with light volume. It did 24 million shares. That's after moving higher. Well, moved higher with 20 million shares out here, but it was an inside trading session. That really says that the trend continues. That trend that it came from was from the downside. Now it looks like what we finally have inside of the IWM is a test of its swing point. It's March 26 swing point. So let's go ahead and put that line on the chart out here. When I say light volume, if we take a look at that swing point from March 26, the high is 122.91. What have we seen so far? 122.90. You got to love it. It's a test of that swing point by 1 penny. 8.4 million shares going against 26 million shares out there. So far, we've got a rejection of price. I don't know about whether we got a rejection of volume or not, and neither will you, not until about 4 o'clock in the afternoon. This is Steve Rhodes with TFNN. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 130 right now. The S&Ps are down 12. Composites off 37. So we had a question during that first segment in our Tiger's Den. Let me go ahead and read you the question. We're going to spend some time answering it. And the question says, very specific question. First, background. The NQ, the current contract, the June contract, 42.83 was the last price on it. Right now it's trading at 42.90. And near the 42.70 low of March 26 and the 42.60 low of last night. Note the Fibonacci 618 support is 42.40 area, and the TAS weekly box bottom is 42.40. So in essence, what our man Z in the den has done, he's identified support inside of the NQ on the daily, on the weekly chart, on the weekly chart for sure. So the question is this: if the NQM declines under 42.60 toward 42.40, taking the 5-hour chart into our Chapman wave seventh leg down, that seventh inning stretch down, would you want to buy NQM? That's the futures contract. Would I want to buy it? And what instrument would I use, knowing that the Friday cash market is closed while jobs data is released? So I think the assumption there is that the NQM would actually get below it today. Would you want to take a long position on it today, knowing that we're coming into a holiday week? So I think that is the question out there. So now let's go take a look at it and look at exactly what it is that he is looking at out here. He mentioned the 5-hour energy chart. So if we take a look at the 5-hour time frame chart out here, the question was, would I buy a G wave to the downside, a seventh wave pattern? And the answer is absolutely, unequivocally yes. And with regard to the vehicle that I would trade, it would be the futures contract, because that's the easiest one to trade out there, because that is the one that gives you the best stop protection. Because with regard to these seventh wave patterns out here, they hold as support or they fail. And if they fail, no telling where price goes to, but the trade is pretty simple. It's one tick below where that seventh wave candle was formed out there. Now, not everybody trades the futures. That always makes things a little bit more dicey out here. Now, why would you take that? If you're watching this on Tiger TV, why can I say that I would take the trade? More times than not, that the seventh wave pattern to the downside works. Now, as an example, we're looking at the 5-hour chart right now on my screen. When we take a look at it, you can see that the last bottom that was formed, which is the price area that Z was talking about with regard to where price has been attacking, happens to be the candle session that took place at 5:15 in the afternoon as the futures contract was closing. This was back here on March the 13th. Now, my clients and I, we went long the NASDAQ, and based on this candle pattern, we did that, and we used the triple ETF out there. You know, most of them, like yourselves, are not trading the futures contracts. If you were trading the futures contracts, they had this chart. They knew where to go ahead and place their stop. Now, the beauty of this pattern here, and why would you take this seventh wave move to the downside? Because it also has got one of Stevie's favorite patterns, which is where price moves lower with less weakness out there. That's what you call the market. See, the role of the market is to do nothing more than to test you, just like the universe, just like feminine energy is supposed to test masculine energy. That's just simply the law of life out here. And with regard to the market, when it tests you and it stretches that rubber band and it's giving you a head fake, it's kind of like the Michael Jordan of head fakes out here. What you know is when things start moving lower with less relative weakness out here, that's a bullish sign. Now, it's a bullish sign when a bullish candle arrives, and one of those bullish candles that did arrive out here inside of the NQ was this little piercing candle. So that was really giving you a signal. Now, the beauty of this pattern here was you can see this little TAS market profile box out here. This was also in bullish formation. This is where your point of control was closer to your support level. So we had a couple of different signals out here that were saying, hey, this looks like a real nice seventh wave pattern to take to the downside. Hey, what is it that took place last night? Not to just say, do patterns repeat or anything, but for goodness sakes out here. Now, we didn't get a seventh wave. We only got a sixth wave. You can see that's the F that is down here, and that's why Z was asking about, hey, that low needed to be taken out to just simply get to a seventh wave. We may get that. I can't tell you whether we will or we won't. But as that sixth wave was being formed, we've got that price relative strength divergent pattern, and lo and behold, it formed last night. A piercing candle on the 5-hour chart. So the answer to that question is, would I take a seventh wave pattern to the downside that confirms, just like a seventh wave pattern to the upside that confirms? The answer is absolutely, positively yes. And again, the best trading vehicle would in fact be the futures contract if in fact you could trade it. Now, why might price not get down there? Well, the reason that price might not get down there is last night, as the markets were moving lower on a 30-minute chart, and this is off of the high, this is off this little shooting star candle that took place on March 30th. Guess what it made? It made a seventh inning stretch candle, and that went ahead and confirmed at 21:30 at 9:30 last night. Then a nice big bounce was in the market. They're very cool patterns. I will say, mwah, thank you, Basil Chapman, for the Chapman Wave. This is Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You know, just to pick up on that last thought there, really the last question, which was, would you, in essence, so the question was, hey, if the market moves down on the 5-hour chart, creates that seventh wave stretch pattern to the downside, and really, in essence, the question was, would you take that trade ahead of the jobs data that's coming out on Friday? Because the futures market is going to be open for just a short period of time out there. You know, do you take the trade ahead of the news? And this is my personal experience. My personal experience is oftentimes what we do is we allow fear to get in the way of taking whatever action it is that we need to take. And this is universal. This is as much to do with trading as anything else. In fact, when you take a look at the psychology of trading, it's really the psychology of life. And we can apply what it is that we do in trading to everything. You can apply what it is that you do in golf to life. And that's just simply how it works. And what I have learned is that the patterns, so as a technical trader, when your pattern sets up, you just simply have to take it. None of us know which ones are going to actually work and which ones are not going to work. And if we let the news cloud our judgment out here, oftentimes the news, remember the news that gets reported out here, you know, the news has got to keep you tuned in. And so they got to keep you kind of like on edge, a little scared, this, that, and the other thing. So, you know, my personal experience is and part of technical trading is to trade without even knowing the news. Okay, in other words, the chart patterns actually are communicating to you ahead of time. And yes, there's lots of volatility when Yellen speaks and release, or the Fed minutes are released. And yes, when the jobs data, you know, Friday's jobs report can always be extremely volatile out there. I say just when the pattern sets up, trade it, put your stops in place, and then go do something else. Go look for the next trade out there. Now, why is it important when we take a look at these patterns, whether it's a 5-hour chart or a 30-minute chart out here, especially in year 2015. And let me show you something. Most of you probably know this, but for those of you that don't, let me just, let's take a look at where did the market actually finish on December 31st out here. And the actual close inside, and this we're looking at the S&P 500, was 2,058.90. You know where we're trading right now? 2,053.04. Now, we have just gone through the first quarter of 2015. And yes, the answer is I do believe the market's forming a bottom that's going to go ahead and take us up into the May 4th timeframe. Nothing has changed with regard to my view there. The market can give me some more information to change that view, but at this stage, it hasn't done that. So until it does that, that is my outlook. But what is really going on with regard to this sideways, choppy-ish type market is this has really been a trader's paradise on some intraday time frames. Now, you don't have to be a day trader. If you trade a 5-hour chart out there, you're making decisions, maybe once every, 5-6 days, something like that. If you're using a 30-minute chart or 120-minute chart, something more than that. But the reality is the S&P has basically done what? It's gone nowhere out here. If you were long and strong the S&P on January 1st, you're basically at break even. If you were short and strong on January 1st and you just held on, you are at break even out here. But there's been lots of these great swings. So I guess the other message that I'm providing to you is that this is a great time inside the market currently because we're kind of trendless, so to speak. This is a great time to take whatever tools it is and whatever things it is that you're trading and go ahead and apply those to some other type of intraday pattern because those are the ones that are providing the types of swings out there. And I don't have anything that indicates that anything would really be changing out there inside of the marketplace. So that's the S&P 500. Hopefully that answers that question. Maybe it was a bit too much information, but that's sometimes just simply it goes with the territory out there. So now let's go back to the markets. Let's go back to the index ETFs out here and see what we've got. So let's go. We took a look at the Qs. We took a look at the IWM. Let's go take a look at the SPY since we were just taking a look at the S&P 500. Now, we looked at the equal weight, right? The equal weight versus the SPY. And what we saw out there was that the equal weight was giving us a signal, hey, not so fast. Of course, that could change at the end of the day. What we do know about the SPY is that yesterday they rejected the March 26 swing point with what kind of volume? Light volume. They tested the high of that swing point, which was 206.37. He actually got down yesterday to 206.36. Volume yesterday, 126 million shares going against 153. Where are we at today? 45 million shares an hour of trading. If I just did straight math on that, and I just simply multiplied it times 6, I'd have 240 million shares versus 153. You'd say we're coming in with volume. But when we looked at the 30-minute chart, I guess it was a 30-minute chart for the Qs, it was saying, hey, wait a minute, opening volume to opening volume, it was actually a bit lighter out there. Let's go see what the message of the SPY is. And we're going to go back to that opening of March 26th out here when we have that last low. And that that volume at that point was 18 million shares inside the SPY, coming back with 22 million shares. So it's coming back with a little bit more volume on here. We'll see if it keeps up. So far, it has not. It's dropped off quite a bit because that second half hour was a 12 million share deal versus 12 million on March 26 out here. So I'd say on the volume perspective, things are likely going to drop off, but still, nonetheless, you go back to the daily chart. And inside the daily chart for the SPY, because it's trading inside that swing point, we have not seen a test of the low. If there's a close underneath 206.37 today, light volume or not, it doesn't matter. And what it says is that you can go test that low, which is at 204.12 out here. So far, intra-session low is at 204.51. Hey, a close above 206.37 today with lighter volume. You now have 2 rejections of that swing point with light volume. Inside of the Dow Diamonds out here, the DIA, by the way, the Dow Diamonds on its 30-minute chart out here, that also formed that 7th wave move to the downside last night out here. So, it's again, it set up a nice move, a nice bounce inside of the markets. So it may not get down to on this 5-hour chart. Let me see on the 5-hour chart. Does it create a 7th wave, potential 7th wave as well? No, it already did that. So its 7th wave pattern, this came in here on March the 26th. And when it did that, it formed a hammer candle out here. So I guess it's important really for me to stay on this chart here for a moment. Let me get rid of that count to the downside. So there's your 7th wave to the downside. There's your hammer candle. That's why, remember we looked at the Dow futures on the daily chart. The daily chart also had a hammer candle and it showed that low. So I'd say both daily and weekly with regard to the Dow are really important because if the Dow breaks that level, That says that, hey, things start to recycle to the downside. At least that's the message for me. That's how I utilize that tool with inside of these charts. Now, back to the Dow Diamonds. Let's go see what the Dow Diamonds are doing, have done. In the case of the Dow Diamonds, they're trading inside of the swing point from March 26, 6.6 million shares. It's done 3 million shares, so it's moving down there with pretty good volume. I mean, you only have to multiply times 2 in order to be able to get down to that level. We'll see if it can test the low. It still hasn't gotten down to the low. 175.46 is the number. We've seen a low so far this morning of 175.57. Key numbers to be watching inside the Dow Diamonds are 177.30. That's the top of the March 26 swing point, and 175.46. Again, it does look like it is moving down here with volume. Whether you go ahead and you take a look at March 11th swing point, or the swing point from March 26 out there. So that covers the indices, that covers the index ETFs, that covers the equal weighted versus its brethren, the actual index ETFs out there. And I think we have, for me, I've got a fairly clear message of the markets. And again, that message of the markets is still that this is more of an April Fool's joke, more than anything else, that the markets are just doing nothing more than forming that next bottom, and it looks like that next bottom inside of gold is formed. It's trading out at 1201.90, so let's go take a look at gold and see what it is doing out here. I was looking for gold to close above 1198 for that next buy signal, and I don't know where it's going to close here today, but right now you're at 1201. That says that the bulls are absolutely in control of gold. That says that what we likely have taking place here is an A to B equals CD to the upside. That A to B equals CD to the upside inside of gold. Let me switch back to this chart. That takes us up to a price objective of 1256.20. I would say more likely 1220, 1277. In fact, what I would say is more likely even to run back to the highs. That's the swing point high from January 22nd out there. What do we know about gold? It's a beautiful thing out here. Gold broke through that descending price channel, did it with conviction, pulled back and just simply tested the swing point here from November the 7th. It rejected that level yesterday, and now it's gone ahead and given us a buy signal. I'm assuming it's going to close above 1198. If it doesn't close above 1198, then all it's really done is run right into resistance. And it says, okay, a couple of more basketball moves out there because it will actually have failed. It needs to close above that 1198. The reality is, I would say 1198 was one number. I mentioned this during the first hour. I would have to say 1208. Let's go ahead and use all of our tools out here, and that's the TAS market profile resistance level. That's its current box. That's a box that formed yesterday, so 1208.30. The question on the miners out here, with regard to the miners, it goes like this. If we take a look at the correlation charts, let's assume that Stevie can find this one. I really do have to clean up this mess out here to make it easier for you, because who wants to be put on hold out here when you ask a question? So I promise to do that. I just am not promising as to when. And here is the chart of gold, of the GDX in the center section, and the U.S. dollar index inverted to the bottom. That way, a weaker dollar moves higher, just to see the correlations inside of gold and the miners. Quite frankly, in taking a look at gold, gold has been stronger than the miners out here. But the most important aspect of this chart here, S&P in the Tiger's Den, and thanks for asking that question with regard to the miners out here, is just simply the directional correlation between the two. And therefore, if gold has in fact broken out, if we get that close above 1198 or the TAS market profile, this says that gold moves higher. Guess what the miners do? They also move higher out here. And if we go take a look at a few of them, let's go take a look at some that have a significant impact inside of the XAU. Let's start off with Gold Corp. GG is the ticker symbol out here. That's a cool name, is it not? What we know about Gold Corp is it's back up above its TAS market profile bottom. What we also know about Gold Corp is it tested the March 11 swing point low. That had 9.2 million shares. It was tested with 6 million shares, and then yesterday, it's another 6 million shares. Guess what? Couldn't bust it out. You can't bust it out, it'll try to go bust it up. Now, in the case of Gold Corp, it's got pièce de résistance. That pièce de résistance is at $20.03. Why do I say that? Because that is the open window out here. That is the downdraft. That is the gap down from March the 6th out there with 13 million shares. If Gold Corp is going to bust that out, if it's going to repair that window, you'd like to see it move into that swing point with more than 13 million shares, 2.4 million shares today. What Gold Corp needs to do to truly change its trend and get above resistance is not just take out 2003, but close above $20.46. It could not bust out the lows. It is going to try and go bust out its resistance level, 2003 to 2046. Ticker symbol there, GG. Let's go take a look at Rand Gold. If we take a look at ticker symbol GOLD, a nice little bull sash candle as we're speaking today. What it did was just simply yesterday came back to its point of control. That's the area where price is comfortable. The market profile inside of Rand Gold is set up to be bullish. The point of control closer to that support level. Right now, price inside Rand Gold is running to resistance at its TAS market profile high. That is the top of that box. That is at 71.60. Closing above 71.60 today, and it's trading at 71.48. That would be bullish. In the case of Rand Gold, it doesn't have a resistance line of that gap down on March the 6th. That window has been repaired. It is no longer a level of resistance. All that Rand Gold is trying to do is to set up an A to B equals CD to the upside. The A point is the low on March 11th. That B point, it looks like it might be the high on March 23rd. Let me see, 73.84. Yep, that is it. Your B point is March 23rd. Your C point is yesterday's low out here. That says it's going to try to get up to 76, maybe $78 and change, assuming it can get above 73.84 and do it with more than 800,000 shares out there. Let's take a look at another. Let's go take a look at Barrick Gold. And the reason we'll look at Barrick Gold is because Gold Corp, Barrick Gold, they've got a pretty heavy weighting inside of the GDX, inside of the XAU. Barrick Gold is inside its swing point from March 26th. That's got 15 million shares. It's in there with volume, 6.5 million shares as we speak right now. Therefore, it's got a couple areas of resistance, just as Rand Gold does. Its areas of resistance are out here at the 1182 to 1210. That is that open window, that downdraft with 20 million shares. But hey, it's doing a pretty good job of convincing me that it's ready to take that on with volume. That says that what we're more likely looking at out here is an A to B equals CD to the upside inside of Rand Gold. Your A point is the low on March 17th. Your B point is that swing from March 26th, and your C point is yesterday's low. Likely price target, if it can clear $12.10, $12.32, $12.71, and then I would say $13.20 out there. That's my view on the miners. That's the correlation with regard to gold. If gold confirms its breakout, so will the miners. This is Steve Rhodes with TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Hammer time. Hey, folks, what we're taking a look at here is the New York Stock Exchange as we go into this last breakout here. Now, look, I don't know where the market ends at 4 o'clock. I wish I could tell you exactly where it ends. What I can do is report to you as far as what's going on right now at 10:54. Now, if the session were to close right here, then the New York Stock Exchange, which is way stronger than the Dow, the S&P, the Nasdaq. The only thing it's not stronger than is the Russell 2000, and they're kind of neck and neck out here. Clue, huh? Is that if we're to close here right now, it would form a hammer candle. And that's at its 0.786 retracement. But that's not the thing that's most important. What's most important is that its price oscillator is back above the zero line. It dipped just slightly below it yesterday. I believe the number was 150, 151, somewhere around there. That's the entire number of net advance and issues it needs in order to get back into bullish hands today. And it's the New York Stock Exchange that will provide us with the most information about the markets out there. So I just was going to point that out to you. Right now, the Dow's off 79, S&P is off 8. Had a request to take a look at Chevron. What's it? CVX? Let me go back. Yeah, CVX, ticker symbol CVX. And looking for a swing trade out here was the question. So let's go take a look at the daily chart here for Chevron, because there's different messages inside the chart as we take a look at the daily versus the weekly versus the monthly. So if we take a look at the daily, speaking of hammer candles, candles out here. On a daily chart, you had a fourth wave to the downside using the Chapman wave. That took place on March the 13th. It formed a hammer candle, and very next candle was a bullish engulfing. This is the way that the markets communicate to you and I. And it communicates to us, especially when you complete a pattern. And we know that waves 4 through 7 out there, that's when the market, as Tom likes to say, squawks, walks, and talks, right? That's really on the Chapman wave, on candlestick charting, that's really how the market communicates to us. So that was telling us that the bulls were ready to defend that line. Then price also gets back above and closes above its task market profile high. What do we know? Just simply continue to use that same system out here. Well, on the daily chart, this says that it's got at least 2 more waves to go to the upside. You'll know for sure if it does that when it takes out that resistance of 106.99 out there. Now, it could be an A to B equals CD to the upside that it forms off that hammer low. And that would give you a price projection, a 1-to-1 price projection of 110.70 to maybe the 112.61 area. It's priced at 105.77. So on the daily chart, from a swing trader standpoint, this says to me that Chevron, CVX, wants higher price. If we go take a look at the weekly chart out here, so we look at an intermediate time frame for Chevron, what we'll see with regard to counts to the downside, let me go see if we can figure that out here real quick. We can see that price relative strength divergent pattern top that it made, similar to something we've looked at today, such as on the 5-hour chart for the NQ out there. It also made a fourth wave count to the downside, and it's just starting to get into a bullish confirmation out here. So on the weekly chart, this says, hey, it just needs to clear the 110-12 area and has got much longer to go out here. So it needs to get above that resistance of 110. Ideally, you'd like to see it get above the 112.96 area. The monthly chart does not look very good when we take a look at Chevron. Of course, it's been beat up. It's been spit upon. It's been trashed out here. And that is most certainly what we see when we take a look at the monthly chart. There's no bear or bullish reversal signal or anything along the lines out here. And this says that resistance is at 111.85. So on a monthly basis, on a daily basis, on a intraday basis, you certainly want to see it get above 111.85. Hey, folks, stay tuned. Our man Basil Chapman's up next. Then we got Larry Pesavento. Of course, it's Wonderful Wednesday, so we got David White and Tom O'Brien to take things home. Have a great Wednesday, folks. Have a nice April 1st. Don't be fooled. See you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.